Welcome to Know Your Money, where we will explore our relationship with money and how the psychology of it impacts our financial decisions, as everyone thinks about money differently. In our podcast, we'll be presenting a variety of financial topics in an easy-to-understand way, which we hope will assist you with managing your money.
Hi, I'm Craig Finch, co-owner of Growth Financial Planning, an independent financial planning practice, and I've been a financial planner since 1986.
Hi, everybody. I'm Bronwyn Waner, co-owner of Growth Financial Planning. I'm a certified financial planner, and our philosophy at our company is to grow yourself to grow your wealth.
Hi, everyone. My name is Warren Grimsley. I'm a director at Rogue Media and help facilitate this wonderful podcast. My main goal here is to try and understand what these two lovely people are saying so that we can all understand.
Welcome to Know Your Money. Hello, everybody in the studio. Felicia, good to have you back.
Thanks for having me.
I see you got more books with you today. So What are you going to teach us today about living annuities?
Today I want us to talk about clients who cease tax residency, clients who emigrate, and how they can obtain their annuity income, and all the ways that and in all the ways that them leaving the country, how it affects their policies.
Can we also chat about clients who pass away in South Africa, parents, and their children are the nominated beneficiaries, but the children are living abroad, wherever they're living?
Yes.
Can we start there? How is that paid out?
So as we had said in our previous chats, a beneficiary has an option to receive a cash lump sum, or they can open a new living annuity in their own name, or a combination of both. So even though those beneficiaries are overseas, they still have those options.
Even if they've ceased to be tax residents?
Even if they've ceased to be tax residents,
Okay.
They have those options. So most of them, obviously, they don't want the hassle of having to earn an income in South Africa and potentially then having to pay tax on that income. They would then rather receive those proceeds, that death benefit, as a cash lump sum. And we can facilitate payment for that into their offshore bank accounts.
So somebody's living in Australia, a child, the parents die in South Africa. They say, we don't want an income because we're living in Australia now. Parents die. Alan Gray will pay it out to the beneficiary. The beneficiary's got a Bank of whatever, Australia bank account. Do the tax as the normal tax as per the death tables.
Yes.
The lump sum gets paid not to the state late bank account, or get paid directly to the Bank of Australia.
To the beneficiary, yes.
Okay, so
yes,
we won't wait for it to go through a block drained account or anything like this.
There's a balance of payments process that we can use, and we can then remit that money overseas for that beneficiary.
What do you mean by balance of payment?
It's a process where we it's done through our authorized dealer. So RMB is our authorized dealer. So they handle that whole process, and they have like specific documentation that they need from the beneficiary in order to then process that money and take that money overseas.
Okay, but bottom line is that money after tax will get paid directly to the child living in Australia.
Yes, directly to that beneficiary. Of course, if that child is a minor, they would need the assistance of a legal guardian. But to answer your question, bottom line is they can get those funds directly.
And that person living abroad receiving money into their accounts, is that seen as income?
No, because that would be it's a cash lump sum. So they would go through the, as I said, the authorized dealer process, which is also approval for international transfer. So it's not seen as income. Of course, though, other jurisdictions may see it as income, but I can't speak on other jurisdictions.
Yeah, so they may get double taxed on that money, if that's what you're kind of asking. Where it lands in Australia could find it as this and then tax them again. And that's where it is kind of important to know for us. We can really give you a proper, this is it, you're only going to be taxed in South Africa, or this is it, and you'll be taxed again, or you can go the income route. And this is where us as your choice architect is important. We've got to lay down the different choices and options for you, and you decide how to take it out.
Yeah, because some jurisdictions do have like inheritance tax and it's quite hefty and all those things. So very important to know.
Okay, so that's death now. The person's alive and they go and decide to live with their children in Australia now. And they've got this living annuity paying out their pension. And they say, okay, well, I want the money. I'm going to be living in Australia now. I don't want to have my money in South Africa. Can they cash it out?
They can't cash it out unless...
Even if they've immigrated?
Even if they've immigrated. So the immigration laws have no impact really on living annuity. So it's not like an RA where, if you're over 55 or even under 55 and you've left the country, you have to wait 3 years and then you can obtain that money. No, that it doesn't work like that for living annuity. So even if you cease tax residency and you move abroad, you can't cash out unless, of course, your capital falls below the de minimis amount, which is 125,000. You just have to continue earning that income. Yeah, so you can't cash out, nor can you transfer a South African living annuity abroad.
Okay, so you can't. Even though there's a connection with Grimsley Australia, there's no ways of moving that product.
There's no way because legislation deems a long-term insurer to be a South African long-term insurer.
Yes.
Okay.
So it transfers between South African long-term insurers.
So then generally with that sort of client, you'd recommend going up to the 17.5% and getting it once a year or staying on their thing, but rather getting it as a once a year. It would again be, these are your choices and these are your options.
Yes.
That's not to say this is 100% right or not, right?
Yes, exactly. We actually have, I like to call them 3 buckets of clients when it comes to when we think about tax residency. So you have a South African tax resident who may not be in South Africa, but they have not ceased their tax residency. That person has to obtain their income into their bank account. We can't facilitate payment into a foreign bank account if you are a South African tax resident.
Okay.
If you are a South African temporarily abroad, so you haven't seized your tax residency, but you do stay overseas and you have that documentation to prove that, we can then facilitate payment into your foreign bank account, wherever you may be. And then the last bucket is the person who has now ceased to be a South African tax resident. So they've formally immigrated, as it was called back then. And then for that person, we can then facilitate payment into their foreign bank account. And as you said, we encourage them to rather take the highest drawdown on an annual frequency.
Okay.
Yeah.
Awesome. I think that pretty much answers it. And then just a client the other day wanted to know, with regards to a living annuity, can creditors access any of those funds, or how does that exactly work? Are they protected in any way? Yeah,
so the capital of the living annuity is protected against creditors. It cannot be attached as for debt to pay debt. However, once you have been paid that income may be attached. So your creditors can attach the income that you receive, but they can't attach the capital.
So you owe 500,000, you've got $1 million in your living annuity, they can't attach that, but you get 10,000 Rand every month.
They can attach
that. The 10,000.
Yes, they can attach that. Yeah. Okay. So same with also maintenance orders, for example, they can't attach the capital of a living annuity. It has to be the income. Okay. Yeah.
And that's because in an earlier episode you said the capital itself is held by Grimsley. Yes. It's not actually held by the person who owns the annuity.
Correct. Yeah. The person who owns the annuity only has a contractual right to receive the annuity income.
Okay.
Yeah.
Awesome. It's been so insightful having you here. Thank you for all your time and all these episodes.
Thank you,
and your
guys.
knowledge has been amazing. Thanks so much.
It's been lovely. Thank you. And I hope it's valuable.
Absolutely valuable.
Thanks.
You. Bye.
Thank you.
Thank you for listening. If you have enjoyed this podcast and would like to subscribe, please visit our website www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.